All right, so welcome back to the very last section of chapter 6, which is lower cost or market. Okay? So, what is lower cost or market? So, eventually, when we buy our inventory, right? If we do not sell our inventory, eventually over time, those inventory items become either old, obsolete, no longer in production. So, what happens to the inventory when you acquire it and it loses value or it just stays on your shelf for a long, long time? It eventually starts accumulating and it starts to lose its value, especially for any kind of item that you have that is, for example, technology. Okay? So, because over the span of time, right, because we have technology, the advancements of technology to build better and more efficient products. Maybe the material is much more cheaper. It's much they mix new material together to make a better product, a much more sturdier product. So that what happens is that anything that you have purchased a long time ago will not hold its value because of technology, right? There's always going to be newer and better products out there because we live in such a consumer society where every year there's always something better and greater out there, right? So, for instance, laptops. If you go ahead and take a look at all the histories of laptops, you're going to notice it's getting thinner, 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 and thinner. And you're going to notice that the screen resolution is getting better and the processor is getting better. Now, that is just a comparison of everything that we're looking at, right? Look at the iPhones, right? Look at Androids. Every single phone, every model that comes out every single year, there's always some kind of new feature that allows the product to be significantly better because the advancements of technology allows us to be able to create such a product, right? Now, because of that whole consumer society, we have to consider that that means whatever that we purchased way back when, it's no longer going to hold its value because one, the product is probably obsolete. It's no longer, it's no longer in production. It's no longer being produced. The materials to make that product is no longer available. They scrapped it, right? Or another thing too is maybe the value of that metal is either too expensive or it doesn't have any value anymore because it's no longer being used. So with that idea, we have to consider that our inventory can lose its value over time. Okay? So think of it, even a broom or a Swifter, right? A Swifter mop. There's always going to be a new, sleeker look to the mop, right? That right there, even though, a broom or a mop doesn't serve a real purpose in, technology, but they still build a product for a newer generation. That product isn't the same as it was, you know, 5 years ago, right? It's a new model, it's a new color, new things, so on and so forth, right? So there's always going to be something new with a product. So in this case, right, we cannot hold our inventory for more than X amount of years. So remember, if you guys remember the whole historical cost principle I've mentioned, right? This is one of the examples of that goes against the historical cost, because in this case we have to follow the reality of the society, right? Supply and demand. The way that we live in such a consumer society, products are always going to come and go. They never stay the same over the years. So you have to know that, right? Especially fragrances, right? They begin to um, run out of a specific scent, so on and so forth, right? New packaging. There's always going to be something new. So, because of that, that is exactly why our inventory items that we buy can potentially lose its value, and this is why we have to adjust our inventory by using the lower cost or market. Okay, so what are we doing here? We are actually comparing what the cost value is to the market, because the market is what's going to tell me how I should, again, sell my product, right? We always compare our products, especially if we are in the competitive pool that sells the same exact product, right? So again, our competitive pool could be Amazon, could be any grocery store. So if I sell a specific product by a specific brand, I need to compare my products to everybody else. So for example, right, if I were to buy a 2020 laptop in 2020, okay? Let's say it's the year 2020. If I were to buy a 2020 laptop to sell to my customers, and right now I hold the value at, I don't know, $900, right? Do you think in 2022 I'd be able to sell that same exact 2020 laptop for the same price? Can it still be $900?
No.
No, because you probably have that brand coming out with a brand new laptop for the year 2022, and you're probably marketing that one right now. And is a person going to want to buy a 2020 version or a 2022 version?
They would like the 2022 version.
They would probably most likely go for a 2022 version because, again, even though the 2020 is fairly new, the operating system's probably fairly new, but you also have to think about that. Technology also has a time frame on it. So for instance, if you still have a laptop that is 10 years old, when you turn it on, how long does it take to turn on?
A whole long time.
It takes years to turn on. So again, operating systems are much faster, right? I believe nowadays they stopped doing a disk drive, and now it's a solid state drive, right? Where it acts like a flash drive. So it turns on instantly, right? So
Right.
again, every single year, especially technology, they're gonna come out with something greater and better, and maybe cheaper material to produce the product too, or maybe even higher quality material, right? Maybe they don't use copper anymore; they use a different type of metal. I don't know. I'm just telling you about a product, right? Now, in that case, if you have that 2020 laptop, since you can't sell it at $900, what happens to the value of that 2020 laptop? Well, even though you purchased it 2 years ago at whatever it cost you, right? Maybe it cost you $400. If it cost you $400, you can go ahead and look it up and see if it holds its value. Because I can tell you this, because of the materials that they make to produce that 2020 laptop, is probably no longer going to be available, right? Because they probably took all those parts and decided to improve it to make the 2022 laptop. So again, there are many, many reasons why you can't say, oh, my 2020 laptop is still $400 cost. I could still sell it at $900. No one's going to buy it. Okay, so best thing that you can do is, well, you're gonna have to adjust your inventory because you waited too long to sell that item. Now, again, what you can do is there are many options that you can dispose your items, and we will talk about that. Whether you can either dispose it for your inventory, you could either try to sell it to a third party, or you could properly dispose it. Again, there are many things that you can do, especially for inventory, because again, if inventory doesn't hold its value over time, then you can expect this. Expect that eventually you're going to have to get rid of that inventory and stock in new inventory. And that's just the reality of doing business, is that your products are not going to hold for more than 5 years maximum. Okay? Especially technology, they only have a lifespan of 3 years, right? So like if you go to the AT&T store, what are the phones that are available to purchase? You can't even purchase the iPhone 10 anymore. And how many years have iPhones been in production? So that's exactly what I'm saying. They're giving iPhone 10s for free. Well, in this case, actually, iPhone 10 doesn't exist anymore because it had so many problems. But in this case, I believe they're giving the iPhone. They do give some iPhone 10s for free out right now, if you buy a contract or something like that. But right now, they're giving it for free. Okay?
Or selling it overseas.
Yes, or selling it overseas for parts. Now, again, yes. And that's the reality of it. If you're trying to get rid of your product, find some kind of way. Now, again, take a look at that. They only hold iPhone 11, 12, and 13 because that's the last 3 years that it has been in production. And people still do use the iPhone, 12 or iPhone 11 because they all hold some kind of value, right? They all still work. That's the idea of technology. But again, people are more likely to say, hey, I'd rather trade my old iPhone to get a better iPhone. Has better camera, better storage, better this, right? So in this case, that is the idea, especially for technology, is they will not hold its value over time, especially over a long period of time. The most maximum, maybe 5 years, but usually maybe 2 or 3 years is maximum, right? So, okay, now that we understand that, we have to essentially revalue my inventory due to the flow of the market, but also due to, time. How do we do so? And that's what this chapter is about, which is determining the lower cost or market. So you're going to be needing to know 4 things. You're going to be needing to know a ceiling price, okay? You're going to need to know what a floor price is. You're going to be needing to know how to determine the market price, and then you're going to determine which one's lower, the market or original cost, okay? So that's the whole purpose of this, is determining the value. Is the inventory asset going to be lower? Well, or which one's lower? My original cost or my market cost, okay? Now, let me tell you this ahead of time. Ceiling price and floor price are formulas. Yes, you have to calculate. Your market and your lower cost or market is going to be a comparison of numbers, okay? So in this case, that's the idea here. So let's go ahead and break it down and take an example, and I'll show you exactly how each and every single one does, okay? And how you calculate and how to figure out the lower cost of market. Starting with step 1, you're going to be needing to determine the ceiling price. Now, you will be given these numbers, okay? You will be given the item that you purchased, the original cost per item, okay? And you're going to be given the replacement cost, which is going to be what the market tells you, as in like you researched it and found out this is what it's being currently priced at. And then you're going to determine your selling price, not anybody else's, your selling price. You're going to determine how much is it going to cost you to dispose each item, as in get rid of each item, okay? And then you're going to determine what kind of profit percentage do you still want to get out of this product, okay? And then, of course, that profit percentage is going to determine what your profit amount is. So this is going to be given. Now, who's going to be in charge of this? Your inventory manager is going to be in charge of this. So again, these numbers you do not figure out yourself. These are numbers that are going to be given to you by the inventory manager, so you can determine whether you need to adjust the inventory or not. Okay? So now that these numbers are given to me, this is how I solve my very first one, which is going to be my ceiling price. My ceiling is going to be my selling price minus the cost of disposal. Okay, so in this case, for this example here, I purchased an item. So it cost me $5.04 per item. So that's my original that I purchased it at. Okay. And then now the market is telling me that it is now $4.89 that it cost. Okay. And of course, I sell it at $8.17. It's going to cost me 87 cents to get rid of this item. Okay. And of course, I want at least a 40% profit out of this. So I want at least $3.28. Okay. So in this case, right, ceiling is going to be your selling price of $8.17 minus that cost of disposal, which is at 87 cents. So again, simple math. You take 8.17 minus 87 cents, you're going to get $7.30. Okay? So now that we established that that's my ceiling, okay, now I need to go ahead and determine my floor. Okay? So how do I determine my floor? Step 2. It's going to be your net realized value minus the amount of profit. What is net realized value? Net realized value is the same thing as your ceiling price, right? Selling price minus your cost of disposal is your net realized value. So in this case, you're going to take your ceiling price and you're going to subtract out your amount of profit. Okay, so in this case, your net realized value is the same thing as your ceiling price. So in this case, $8.17 minus 87 cents is going to give you $7.30. So that's your ceiling. I'm going to take that ceiling of $7.30 and I'm going to now subtract that $3.28. And that's going to give you your floor price of $4.02. Okay. So now that I have my floor price, I now need to figure out what my actual market price is. So that's step 3. Now here's the rule. Since I said step 3, when you are determining the market value, you are doing a comparison. Here's the rules. Ceiling price, if it's greater than your replacement, then that's condition number 1. Your ceiling price needs to be greater than your replacement. But if replacement, right, is greater than your floor, then your replacement becomes your market. However, here's the second condition. But if your replacement is less than your floor, then your floor becomes your market. Whoa, mumbo jumbo. So let's break it down so you can be able to understand. What am I doing? Well, let's take a look. We're going to be comparing 3 numbers, right? We're going to be comparing our replacement cost of $4.89, and we're going to compare my ceiling and my floor price, okay? So remember, not your original cost. We're comparing the replacement cost. The one that, when we did our research, what the market has told me that it is currently valued at, okay? Well, excuse me. So again, market, ceiling, and floor. And what do we do with it? You're going to put it on a number line and you're going to compare this as a way to measure which one is going to be selected. So in this case, what you're going to do is you're going to put these values in numerical value order from highest to lowest or lowest to highest, however you want to treat it, okay? So in this case, I have it from highest to lowest. So my highest value is going to be my ceiling price at $7.30. The lowest price is going to be my $4.02, which happens to be my floor price. And then, of course, what's in the middle is going to be my replacement cost at $4.89, right? So once you put your 3 values in numerical value order, okay, you're not going to do any math here. You're just comparing, okay? You're comparing the highest value to the lowest value. Now again, imagine this. You're in a home, right? You're in a room. You can't go above ceiling and you can't go below floor. Okay? So in this case, that's the idea. So that means what are you going to do? To determine the market, you're going to take the value that's in between or right in the middle. So in this case, it's not technically in the middle by, calculation wise, but what I'm talking about is that when you are comparing the numbers, we're looking at the value that's right in the middle. That's less than your highest value, and that's greater than your lowest value. Hence, if you notice, I didn't say ceiling, floor, or anything, right? We're looking at the highest value. Whether if it happens to be your ceiling, then it's your ceiling. If your lowest value happens to be your floor, then it happens to be your floor. But for any reason that it becomes your replacement, then your floor is going to be the number value that you're going to choose in the middle. So in this case, which value am I going to choose? The middle value, which is going to be my $4.89, and that's going to be my market cost or my market price. Okay? So that's the idea here is we're calculating these exact numbers so we can determine, right, which value is going to be in the middle. Okay? So in this case, my $4.89 is going to be in the middle. So then, last but not least, step number 4 is going to determine. You're just going to answer the question, right? Which one is lower? Your original cost or your market cost? Okay? So in this case, we're going to take my 504 and compare it to 489. Now, here's the condition. If my market price is greater than my original cost, then your original cost is definitely lower. But if my market cost is less than my original cost, then you're going to take your market cost. And then once you have that, you're going to have to adjust your inventory. Okay? So for instance, let's do it again. Compare which one's lower. Well, in this case, my original cost was $5.02 and my replacement cost was $4.89. So obviously, $4.89 is lower than $5.02. So therefore, my lower cost or market is going to be $4.89. Okay? Any questions in regards to what we learned? Okay? So here's the first example we just did. Okay? So let's practice. Okay? So here on the left I have all the formulas for you. Okay? So let's practice. So scenario number 2. If I purchase a product originally that cost $4.01, okay? And now the market is currently telling me that it's $3.92. I sell this product for $8. Cost to dispose is 40 cents, and the amount of profit is 45%. So I want $3.62 out of it. Okay? So let's go ahead and determine what my ceiling price is going to be. Okay? So what's my ceiling price for my second one? $7.60, right? You're going to take your selling price of $8 minus your cost of disposal, 40 cents. So therefore, you should get $7.60. Okay? How do I solve my floor now?
Okay, so I see amount of profit What's your net realized value again? Is that the number you just came up with?
Yes, your ceiling price, yes.
Your 760. Okay.
Mm-hmm.
So let me get a calculator. 760 minus 398.
Okay, good, right? 760 minus $3.63 will give you $3.98. Okay, so now let's go ahead and determine my market value. So in this case, I need to compare my ceiling of 760, my floor of 398, and my replacement at $3.92. So which value is in the middle?
398.
398. Okay, because in this case my replacement is less than my floor. My replacement is $3.92, which is less than $3.98. Okay, so make sure you guys are looking at the numbers very carefully. So in this case, yes, my market is $3.98. So now the last one is the last question. Which one's lower? Original cost of $4.01 or my market cost of $3.98?
Which one's lower? 398.
398 is your lower one. Okay? So that means if for any reason that you end up getting your replacement, or not replacement, excuse me, your market to be lower than what you originally purchased it, that's where you're going to have to adjust your inventory. Okay? All right, last one. Okay, we got original purchase cost of $3.49. The replacement cost is $3.05. Their selling price is $8.25, and then cost of disposal is going to cost me 95 cents, and then I want $3.50 profit. So how do I solve for my ceiling?
So I think I did something wrong. Hang on 1 second.
No worries.
I got 730 again. Is that right?
Let's say, well, we're going to take $8.25 minus 95 cents. Okay,
yeah.
so yes, it is 730. Okay. How do I solve for my floor?
Price 730 minus 380.
Okay, good, right? You need to take your 730, which is your ceiling, minus the amount of profit of 350, and you should get $3.80. So once again, now let's compare my ceiling to my replacement and my floor. So in this case, 730, 380, and my replacement is 305.
380.
380. Okay, so therefore, no, 380. So now let's compare. Which one's lower? My original cost of 349 or my market cost at 380?
349. Your
Three.
original cost.
Yes. So in this case, if my original cost is lower than what my market value is, you do not change your inventory because it's already at its lower cost. It's not going to hurt you. You didn't lose anything, or the inventory value is significantly the same. You cannot add value to it, okay? So make sure you guys understand that. You can only adjust the value if it's lower, not add. Okay? So in this case, my original cost of it is much lower. That means I paid at a lower price. So that means the value of my inventory is lower than what the market says it is. Okay. So what happens when you actually figure out which one's lower, the original cost or the market cost, right? So because this class is a bookkeeping class, I have to show you how you adjust it through journalizing. So we have the direct versus the indirect method of recording this lower cost or market, okay? Now the direct method, okay? Now, both of these are correct, but if you really think about it, in reality, it's probably not the most best way to do things, okay? The direct method allows you to adjust the inventory directly by taking it out through cost of goods sold. Okay? So in this case, right, instead of actually selling the product, we're just going to say that it got lost in the cost of goods sold. Now again, reality, not the best way to look at your inventory, right? You can't just say, oh, my inventory lost value, I'm just going to throw it away in my cost of goods sold. I'm going to sweep it under the rug in my cost of goods sold. Not the best way, but it is 100% valid, and it is approved by GAAP, right? Because in this case, right, instead of having to adjust your inventory accordingly, right, you can technically set that you took the loss through selling the product, right? And of course, that means you're not going to even recognize that you took a loss in the first place, right? You just shove the loss into cost of goods sold and pretended that you sold it, right? Now, again, not as recommended, but again, it is 100% valid to use the direct method, right? Where you have the indirect method, which allows you to actually adjust your inventory by creating an expense account, right? To recognize the loss that you're taking for the inventory, okay? Which is definitely more accurate because in this case, that's what you're doing. If you do end up purchasing your inventory and because the way it's valued, if it is significantly lower than what you originally purchased it at, you should be recognizing it as a loss. But both of them are 100% valid methods that you can do for both, for inventory, right? Now, please choose one or the other, right? So let's go ahead and take a look at direct write-off when you're using periodic inventory, okay? So here is your example of inventory, right? Let's say when you purchased the 1,000 units at $1.25 on January 1st, 2020, and at the end of the year, you are going to make an adjustment, okay? And of course, now your inventory due to the market, all right, the market cost now is lower, okay? It's now $1.15. So now let's record this adjustment, okay? So in this case, January, it was valued at $1.25. Now at the end of December, it's now valued at $1.15. Now again, of course, these adjustments can be done at the end of the year because again, how often does an item change its value over time? Give or take, give it at least a year, right? Especially when you have technology, right? If you're looking at the phones and laptops and TVs and electronics, right? Give them a span of a year and they can hold its value within that year, but this adjustment is usually done at the end of the year because of the time frame, right? You don't want to do it every the end of the month because it would be pointless because they're not going to lose its value. They're not going to change its value drastically in a span of a month, okay? So in this case, my mugs, I purchased 1,000 of them. Again, it was $1.25 originally in January, and now in December it's now $1.15. So therefore, my total is $12.50, and then my total is $11.50. Okay? So how do I use the direct method for periodic inventory? So again, when we do our conversion entry, right? This is what you have to attach to that conversion entry. You need to attach inventory, okay? And you're going to have the cost of goods sold, right? Now, in this case, my cost of goods sold is being credited, not debited. But my inventory is being debited because in this case, what I'm going to do here is I'm just going to recognize for the value of what it is. And instead of putting the whole entire value of my $12.50 that I originally purchased it, right, because this is a conversion entry, I'm losing it to my cost of goods sold, right? All right. And that's the direct write-off method. So when you do your inventory conversion, right, because we purchase them on a purchase expense account, and when you do your conversion, you're going to only convert and add in your inventory that it's at the fair market value right now, or the replacement cost in this case, or whatever the market cost, excuse me, at that $1.15, and you're gonna take it out from the cost of goods sold. Okay, so that's the first method, right? So let's talk about the indirect method. Well, here you get the same values. Now, this one is different. This one, we're actually going to be recognizing that we're taking a loss. So in this case, you're going to do the same thing, okay? That you're going to have the inventory and you're going to have the cost of goods sold, but this time it's going to be for those exact values of what you originally purchased it at. And then you're going to create a contra account for the allowance here. But at the same time, this one right here, you're going to create an expense account called loss due to market of inventory, whatever that you want to name it. Loss due to the market, okay, of inventory. And that's where you're going to that's your expense account, right? And the allowance to reduce the inventory to market, that's a contra account, okay? And that's where you're going to take that difference between the two, right? And adjust your inventory accordingly. So in this case, you are recognizing the inventory at its full value, okay? And of course, you are also going to be recognizing that you're going to create a loss on the difference due to the market. Okay? All right. Any questions in regards to this?
No.
Okay. So again, I also put perpetual inventory in there if you're interested in that. We'll talk about perpetual inventory in chapters 7 and 8. Okay, so chapter review. Now, for this class, I'm not going to test you on doing the conversion entries, yada yada this. I just want you to be more focused on how these numbers are being derived from. Okay, so no journal for this one. Okay, just understanding where these numbers come from and why we need to adjust our inventory because of the market, right? So in this case, I just need you to know these 4 things because I'll be testing you on you calculating the lower cost of market. Okay? So let's go ahead and do our in-class example. So first things first, we need to determine our ceiling price, floor price, our market, and our lower cost. So again, this is a table that is going to be what you're going to be looking at when you do the exam, right? You're going to be given numbers, and you're going to need to solve for these 4 numbers, okay? So this example here, we purchased chips, okay? They cost us 89 cents. Now that maybe due to the production, maybe it was a limited edition type of chip. So now it's valued at 49 cents, okay? So we sell these chips at $3.99 to dispose them and get rid of them. It's going to cost me 15 cents. And the amount of profit I want is $3.05. So how do I solve for my ceiling?
So it would be 89 cents minus 15.15.
No, not replacement cost. My selling price minus the cost of disposal.
That's what I said. 0.89 minus point.
My selling price is $3.99.
Okay.
That's my replacement cost. Or I'm sorry, that's my original cost. 89 cents is my original cost. I'm looking at my selling price.
384.
So $3.99 minus 15 cents to dispose is going to be $3.84. Okay?
384 price
Okay?
minus the floor profit.
Mm-hmm.
Price minus 305. 79 cents.
Okay? So in this case, my floor is going to be my ceiling minus the amount of profit of $3.05. Okay? That's going to give me 79 cents. Okay? So now, we need to solve for the market. We need to compare three numbers, right? Ceiling, floor, and replacement. So 49 cents versus 384 versus 79 cents. So which one is in the middle?
79 cents.
79 cents is going to be in the middle, right? Because the highest value is $3.84. Lowest value is my replacement at 49 cents. Okay? So now let's determine which one is lower, my original cost of 89 cents or my market cost at 79 cents. Which one's lower?
The 79 cents.
79 cents is lower than 89 cents. Okay? So that's the first one. Second one is we bought some cups, right? We purchased them at $2.59. Right now, they tell me that it's at $2.49. I sell these cups at $8.99. To dispose of them is going to cost me 75 cents. And then the amount of profit I want to get out of it is $5.84. So again, how do I solve for my ceiling?
Selling price minus cost of disposal.
Good. So in this case, $8.99 minus 75 cents.
824.
Good.
Net price value minus amount of profit.
Okay, so $8.24 minus $5.84
Equals 240.
240. So now I need to compare three numbers: ceiling, floor, and replacement. So 249, 824, and 240.
249.
249. Yes. Okay? Because my lowest value is 240.
Ouch.
Okay? And then now we need to compare which one's lower. My original cost at 259 or my replacement cost at 249.
249.
249. So again, this time I got some shirts that I purchased at $1.99. The replacement is now going to be $1.66. I sell them at $4.99. To dispose of them is going to cost me 22 cents. And the amount of profit is $2.99.
So selling price minus cost of disposal is 477.
Okay.
$2.99 is 178.
178. So now let's compare. Which one is in the middle? 166 compared to 477 and 178. 178. Okay.
For that one, we're comparing the replacement cost, the ceiling price, and the floor price, right?
Correct.
Okay.
Yeah, so in this case, my highest value is 477. My lowest value is $1.66. So therefore, 178 is in the middle. Okay? So then now, last but not least, which one's lower? My original cost at 198 or my market price at 179? Or
170.
I'm sorry, 178.
So 178.
Good. Okay. Let's keep going here. So we have pants. Okay, I purchased them at $5.25. Okay, its replacement is now going to be $4.98. I sell them at $14.99. To dispose of them, it's going to cost me $1.85, and the amount of profit I want to get out of it is $8.15.
So it'd be 13, 14 for the ceiling price.
Okay. What's the floor?
It would be 13, 14 minus 8.15.
Mm-hmm.
And it would be $4.99.
Okay. So let's go ahead and compare. Which value is in the middle? I'm going to compare my replacement at
Hey, sweetheart.
$4.98. Ceiling is $13.14. Floor is
Yeah,
$4.99.
it's not good. No, turn it down on one, please.
Which value is in the middle?
Be $4.99.
$4.99, because your replacement is lower than your floor, right? It's $4.98. So in this case, your market is $4.99. So which one's lower? My original cost at $5.25 or my market at $4.99?
$4.99.
$4.99 is lower. Okay. So the next one I have here is hats that I bought for $2.58. The market is telling, or replacement is going to tell me it's $2.05. I sell them for $9.99. To dispose of them is going to cost me 59 cents. And last but not least, the amount of profit is $7.49.
Okay, your ceiling price would be $9.40.
Okay. My floor is going to be
Minus $7.49.
mm-hmm,
$1.91.
$1.91. So let's compare. Your replacement at 205, right? Ceiling at 904, at 940, and your floor at 191. Which one's in the middle?
be 205?
It would be 205. So now the question is, which one's lower? My original cost at $2.58 or my market at 205?
205.
205. Okay. All right, so now that I bought some toys, they cost me $1.05. To replace them is going to be 98 cents. I sell it for $6.99. To dispose them is 11 cents. I'm at a profit $5.81. So ceiling,
Okay, 688.
8.
$6.88. Okay.
And then $1.07.
Okay, 688 minus 981 gives you $1.07. So now let's compare. 98, 688, and 107.
Okay. 107.
107 is in the middle. Good. So then, which one is lower? My original cost at 105 or my market price at 107?
105.
Your original cost is finally it at 105. Okay. Last two here. Okay, we got some pens that we bought for 78 cents. It's now valued at 33 cents. We sell them for $2.99. Cost to dispose is 7 cents, and the amount of profit is $2.24.
So 292. And 68 cents.
So let's compare 33 cents, 2.92, and 68 cents.
68 cents.
68 cents. So therefore, which one's lower? 78 cents or 68 cents?
68 cents.
68 cents.
68 cents is lower. Last example is going to be a laptop. Okay, it cost me $584.60. The market is now telling me it is $562.11. I'm sorry, $562.17. I sell it for $849.99. To dispose is going to cost me $129, and the amount of profit I want to get out of it is $127.50.
So 720.99.
Okay. Whoops.
593.49.
Yep, Excel is picking up what I'm doing here. So let's compare. Replacement at $562.17 versus $720.99 and $593.49. Which one's in the middle?
593.
593 is in the middle. Okay, so therefore, which one's lower? My original cost at $584.60 or my market at $594.49?
584.
Your original cost. Okay. All right. Good job. All right. And that is it. Any questions in regards to the lower cost or market?
No.